Hello traders, this is Simon, and in today's tutorial I'll be talking about fair value gap and breakaway gap. I'll be showing you how to point out if a gap is fair value or is just a breakaway gap, and how you can apply it to your trading. You notice that sometimes when you have done your analysis, when you are waiting for your point of interest, especially fair value gap, you notice that price never gets to your fair value gap and price displaces lower or higher without tapping into your fair value gap. One thing is that we have fair value gap and we have breakaway gap. Then how do you identify whether a gap is a fair value gap or is a breakaway gap? That is what I want to show you in this video. And if this has happened to you before, I want you to, if price have left you and your fair value gap, you and your point of interest, and displaces lower or higher without you getting entry, I want you to notify me on the comment section. Okay, take a look at this particular diagram. I want you to observe something. You know that if you don't know what fair value gap is, you should go and check my videos. Check my channel. I have some videos that talk about fair value gap. I want to show you something. You know that for fair value gap to form, you need 3 candlesticks, 3 series of candlesticks. This is candle 1, this is candle 2, and this is candle 3. And you notice that the low of candle 3 and the high of candle 2 did not overlap, creating a gap between them. So this is now creating a fair value gap. But in the recent before, you will be waiting for this candle now to come back to this fair value gap to give you entry to the upside. But look at what price did. Price never got to this fair value gap. Why? Because this is not a fair value gap. This is a breakaway gap. Why? Because the candle 3 closed above, look at it, clearly closed above candle 2. So if candle 2, because we have candle 1, 2, 3, if candle 2 closes above the high of candle 2, then price will not come back to this fair value gap. That is the mistake you have been making. This is candle 1, this is candle 2, and this is candle 3. And you notice that whenever candle 3 breaks, clearly breaks with body, not weak, clearly breaks above candle 2, then price is not going to tap into the fair value gap again unless we have taken liquidity above, maybe some sort of buy side liquidity around this area before maybe price will decide to come back to this fair value gap. You understand? But there is how you can take advantage of this breakaway gap. I will show you that on the chart. You understand? But this is now the difference between fair value gap and breakaway gap. You understand? In the breakaway gap, once the third candle, and always let it be on the higher time frame if you want to take advantage of it, because I'm using daily time frame as an example now to show you. You understand? So if candle 3 breaks, this is day 1, day 2, day 3, and day 3 breaks above day 2, the high of day 2, creating a gap here, then what you will do is that your trading area will now be the low of this candle and the high of this candle. So anything, any fair value gap you see within this area is where you take the trade, not this fair value gap. You understand? Let's move to another one. Look at this second diagram. This second diagram is a fair value gap. Why? Because we have candle 1, candle 2, and candle 3. And look at what happened here. Candle 3, this candle 3 did not close. We didn't have body close above this candle 2. And look at what happened later. Market came back and used the fair value gap. Are you seeing it? So this is a fair value gap, not a breakaway gap. But remember, in the first scenario, the third candle clearly breaks and close above candle 2. You understand? So for it to be a fair value gap and for price to easily come back to the fair value gap before displacing higher, the third candle must not close above the second candle, so that price will immediately come back to the fair value gap and continue higher. That is a fair value gap. Then let's check the third example. This is a bearish scenario. We have candle 1 here, candle 2, and candle 3. I want you to observe what happened here. This is candle 1, 2, 3. You notice that candle 3 clearly closed below candle 2, creating this breakaway gap here. Are you seeing it? So price will not come back to this fair value gap. You understand? So your trading area now will not be, this is on a daily time frame also. Your trading area now will not be this high and this. Anything you have here is what you use to continue the trade to the downside. You understand? Then let's go to the chart and see some examples. Okay, before I show you chart example, I want to demonstrate something. The reason why price cannot come back to a breakaway gap is that, let's take for example, I am having these two levels, for example, and maybe this is point A, this is this is point A. Let's say this is point A. You are going to from point A to B, and you have left point A. On getting to this place, this is point A going to point B, and point A is already very close to point B, and maybe somebody called you that is traveling from point A to B that maybe you left your car at this junction. You understand that the person kept the cab for you. Will you now begin to come back from here to collect the cab before going, or will you just get to point B and take what you want to take and come back to this point where you left the cab? Let me come back to a market scenario now. If price, you know that if price have taken, let me clear this first. Okay, let's take for example, I am having these two levels, and maybe we have something like this, and maybe we have this price action, for example, and market now continue coming down, and on getting to this place, market took liquidity. You understand? This is point A, this is point B. Market took liquidity here, and market now gave us market structure shift like this. You understand? And after giving us market structure shift on this area, market now created a fair value gap around here, and after giving us a market structure shift, market now created a fair value gap around this area. You understand? In most cases, if the market is if there is momentum in the market, if there is liquidity, you notice that if there is high volume, you notice that price will always like to give us short pullback. You understand? Take liquidity here, above here, before even coming back to this fair value gap. You understand? In most cases, if the price is if the movement is very aggressive, market in most cases, we no longer come back to this fair value gap until a higher time frame liquidity is taken. You understand? Let me go to the actual chart to show you how you can take advantage of breakaway gap and use it to form a trade. Use it to frame a trade. Let me go to Bitcoin chart on the daily time frame. I want to show you something. I want you to observe what happened here. Look at what happened here. Are you seeing this movement to the upside? Look at this movement. In the early stage of my trading, once I see this kind of thing, look at, I have candle 1 here, right? Remember, market already took liquidity below here. Are you seeing it? We took liquidity below here. Then look at candle 1, candle 2, candle 3. Are you seeing that we have a fair value gap here? Look at it. We have a fair value gap here. In the early stage of my trading career, I would have waited for price to come back to this fair value gap because we've gotten a market structure shift here on this level. You understand? So I'll be waiting for, when I saw this candlestick, I'll be waiting for this to come back to this fair value gap and continue. But guess what? I will always miss this entry because price will never come back to my fair value gap. And in most cases, I'll just anticipate that since I have fair value gap here and I have gotten market structure shift at this area, then I will now try to trade CRT here, candle rate theory. I will now try to use CRT. Then I will go to 1 hour time frame and look for market structure shift. You understand? I will now go to one. Let me look for that area. Look at it here. I'll go to 1 hour and look for market structure shift. Then I will take the trade. Then I will now be targeting this area. But guess what? Market will now take me out and continue higher. You understand? I will now blaming myself. Why will I be taking counter trend in the first place? You understand? But if actually I knew about breakaway gap, I would have, you understand, instead of trying to short the market, I would have been looking for a buy opportunity instead. Okay, how do you trade this now? Let me show you. This is a breakaway gap. How do you confirm it's a breakaway gap? Because we have candle 1, candle 2, and candle 3. And candle 3 clearly closed above candle 2. Look at it. Are you seeing it? Clearly closing above candle 2. So we don't have business with this breakaway gap, with this fair value gap again, because this is the target. This is now the nearest, you understand, the nearest liquidity for market to take. So how do we trade this? We now mark the low of this candle and the high of this candle. Are you seeing it? So this is the range we are working with now. From here to here is what we are working with. So the rule is that if you go down time frame, any fair value gap you see within this range, not this one again, this one now has become our protected low. You understand? This particular low of this third candle has become our protected low. So if you go down time frame, any fair value gap you see within this range is where you take the continuation from. And here, this point will now be your target. Let's go to 4-hour time frame. Are you seeing it? This is the range I'm talking about. This was the down liquidity. Let me remove the line so that I do not confuse you. This is the range I'm talking about now, from here to here. Where is the nearest fair value gap you are seeing? Look at the fair value gap here. Are you seeing it? So your entry would have been here on the 4-hour time frame. If you like taking trading on the 4-hour time frame, then here is your protected low. Are you getting me? Here is your protected low that you put your stop loss. Then this will be your target for 1 to 3. You understand? But if you wanted to have a better entry, you can go to 1 hour time frame and see what is happening there. If you check 1 hour time frame, here would have been your entry. This is where we got change in state of delivery. Look at it here. Are you seeing it here? Then you would have taken your entry at the close of this candle, then pull your stop at the low of this candle, then target the same area. I think we have more than, this is 1 to 4. You understand? So this is how you take advantage of a breakaway gap. You understand? So when you see a fair value gap, always check the third candle. If the third candle fail to close above the second candle, then there is every possibility that price will immediately come back to the fair value gap, test the fair value gap, and continue higher or lower, depending on where price is going to. You understand? So remember the rule. Once you've gotten a breakaway gap, you go down time frame and see the nearest fair value gap. That is where price is going to continue from in most cases. You understand? So this is how to take advantage of a breakaway gap. Instead of you waiting, and price never come to your breakaway gap. You understand? So once you see the third candle, especially on the higher time frame, I do use daily time frame so that my risk to reward, you understand, will make sense. That is why I go to daily time frame. You understand? So guys, if you find this video helpful, don't forget to like, share, and subscribe, and turn on the bell notification so that anytime I drop videos like this, you'll be notified. And if in some cases you have made mistake while waiting for a fair value gap to come to your waiting for market to come to your fair value gap, and market left you and displaced higher or lower, let me hear you on the comment section. Thank you guys.